Hi, everyone. I'm Jan Mercer-Doms, the Vice President of U.S. Development with Join Mayshad. We are an ecosystem of brands for women, by women, connecting women to each other and to the companies, causes, and organizations that champion equity for women professionally and personally. Today, you're with us watching our Women Money Show, brought to you each and every Thursday. Please make sure to subscribe to our YouTube channel, Join Mayshad, and make sure to hit the bell to stay up to date with all of our programming and receive notifications. And I personally invite each and every one of you to join us on joinmayshad.com, become a member, and together we will revolutionize how professional women connect, engage, and do business together. Oh my gosh, it is Q4. Welcome to the end of the year 2020, and no better time to be having a conversation about money than for all of us for whom we just filed our taxes if we had filed extensions. So I know that so many of us out there, no matter if we're female executives, business owners, or entrepreneurs, and of course the wonderful men that support us, are thinking about tax planning and financial planning for end of year and how we launch into 2021. No better person to have this conversation with than Kerri Kimball. Hi, Kerri, welcome.
Hi, Jan. Thanks for having me.
You're so welcome. It's so good to see you, and I'm so glad to be having this conversation with you today. Kerri is a managing director at Apogee Wealth Advisors. Kerri, we have so much to talk about today, from women and money to ESG and social impact investing to just helping us understand what's going on during this really crazy moment in time that is 2020.
Yes, I look forward to looking back on this and seeing everybody in person. It's been an amazing 7 months, and so much has happened in the markets, and so much is happening in the economy.
Kerri, let's start by having a conversation around why are you so passionate about the work that you do now? What led you to where you are today, having this conversation together?
Exactly. Growing up, I'm from San Francisco originally. My dad was an accountant, and I always saw the work he did helping people with money problems as something I wanted to do when I grew up. And I moved into a corporate role. I worked in San Francisco and Sydney, Australia, and then in New York at large corporate ad agencies. And then about 15 years ago, I moved into personal financial planning and investment advice.
And Kerri, we talk a lot, you and I talk a lot about, women and money and the unique complexity that we bring to the table in the sense of the ways in which we manage our money and the differences around our methodologies in terms of thinking about what does that mean for us. Let's talk about that, particularly right now. What are you seeing with the clients you work with in the sense of what's coming up for women?
Yeah, this has been a tough financial crisis for women, more than most groups. And a lot of women are either working really hard, long hours with kids at home, that's sort of what's going on here, or they're on furlough and they've got too much time on their hands, or they're at home rethinking, like maybe taking some time out of the workforce. And what does that mean for them? So I find that people are in a lot of different places, financially and in their careers. So, I think for each client, as we go through this crisis, there's no one size fits all piece of advice for every person.
And Kerri, I would imagine that, for so many women, it's a shock because there are drastic differences in the sense of what 2018, 2019 may have looked like versus 2020. So psychologically, that's challenging to manage, right? When you may have been an equal wage earner in the household or even head of house, and now, learning how to manage with a lot less. And so that also ties into like identity, right? Like how we think about the value that we bring to the table. And historically, we equate value with money. Let's talk a bit. I know that there's a lot there, but let's tease out some of that.
There's a lot there. And I know this is something very dear to our hearts right now, because money is power in the world and in our relationships. And it's really tough transitioning to, okay, I don't go to an office anymore. My office is now in my home. How do I turn off that professional part when I leave my home office and then turn it back on when I come in? And how do I relate to the rest of the world? Like, how do I stay connected to the rest of the world from this point? And financially, I think the big answer in all of this is saving, and saving aggressively if we can, so that we're prepared for times like this where we have interludes in our careers.
So, Kerri, it's interesting you mentioned that, because, you and I have had conversations about what does it mean to be in your 50s, even though we're in our 30s. So, and given the fact that there's so much disruption and so much change happening now on so many different levels, let's talk about what, particularly for women, happens in our 50s that you think we need to be paying attention to.
That's a great question. I think I hate to admit to being 50. No, but it's a really great time for me, it was turning 50 was about going through, taking an inventory of my life and looking at things that don't serve me anymore and taking them out. And I think the pandemic accelerated that process, where we really got confronted with what in our life doesn't serve us. And maybe that is the commute. And maybe it's your kids, soccer that they're just not good at, right? You drop the soccer. And maybe slow down a little bit and spend more time with the things you really value. So I found that being in my 50s was a time of connecting to those values.
It's interesting, because I think that what you just articulated so beautifully resonates so well with our ecosystem at large, no matter what decade we're in our life. I think that maybe for women in their 50s and 60s, and look, like, you and I are both a part of kind of the New York City, metropolitan space of the world. And so we never retire, right? Like, we know women in their 70s and 80s who are still going very, very strong. But I think that there's something that happens in your 50s and your 60s where you start to see kind of I hate to say it this way, but the writing on the wall, in the sense of wanting to see the end of the tunnel as it pertains to retirement, or how you reinvent and pivot into your plan B, plan C, plan D, whatever that is, right? In terms of how you define your career. And so do you find that there's almost more of a sense of urgency now around those matters related to COVID? Like, what's coming up for your female clients? Are they experiencing some of those things that we're talking about?
Mm-hmm. It's, so many different people are in a different place with it. I think that I have some clients who are pivoting to new careers, but it's slow. Opportunities are slow in coming up right now. And so finding the funding to keep them going during these times, and the patience to keep going, keep doing what you need to do to get that new career going, that's a challenge that a lot of people are up against. I also have clients who are in their 70s who are killing it. They are making more money now than they ever did in their younger years, and they're just really hitting their stride. So I love seeing that. I hope I get to continue doing what I do into my 70s.
Right, Kerri, here's a question for you. Why do you think that is? Like, do you think it's because they are in the right place at the right time? Is it because you think that they're more accepting to taking risk now that they lived through their 30s, 40s, and now they're just in a different mindset? Like, what do you think is contributing to that? Because I think that there's something I'm asking, because I think that there's something really valuable that we can take from that, no matter what age we are.
Mm-hmm. I think it is that it's that sort of knowing yourself, knowing your skill set. And it's also having a network of women who are in positions of power to give you the business or to make those connections for you. That's still really important. Mm-hmm. And when, finally, in your 60s and all your friends are in your 60s and they're in positions of power, it's easier to help each other, frankly.
That's true. Let's talk a bit more about that, in the sense of that kind of the power of the network and the power of your ecosystem. And I think that there are many reasons why men tend to network in ways that are very different from how women network. But I honestly think that this is a moment in time for women to shine as networkers because we love to talk. So we don't necessarily need to network on the golf course or at a ball game or, out for cocktails or, extravagant dinners. But we actually have an opportunity now to really, truly do what we do best. And that's really about relationship building. Share with your thoughts about that. I would love to hear what you think.
Mm-hmm. I think, Mayshad is a great solution. And that's why I became a member soon after the pandemic started, because you're very good with networking opportunities and you're a master networker. I think with our world a little smaller right now, because of the pandemic, we find ourselves building relationships with people around us, and they're deeper relationships. I have a deeper relationship with my business partner now than I have in 7 years. And that's kind of a surprise coming out of this pandemic. And I think that we're going to be doing business with the people closer to us.
That's a really, really interesting point. And I think that there's a lot of value in the sense of how we simultaneously use this time to think globally, right? Mm-hmm. In the sense of, technologies, for example, that can, you and I can have a conversation no matter what part of the world that we're sitting, even though you and I are relatively close from a geographical perspective. But,
mm-hmm.
There's the sense of the world is our oyster from how we connect. But there's also, I think, something very special about just the physicality of how we reframe communities and how we reframe, really connecting to people at a more individualistic, like I see into your living room, you see into mine. Like mm-hmm. That's something we never did in real life. And so it's a whole different sort of experience, I think.
Mm-hmm. And I think, and the other side of the coin is that now that I have a remote office set up, I could work with anyone across the country in my niche. And I think that has been amazing for women over the past 6 months, being able to think nationally and globally and not having to physically be there to help someone apply our talents to their needs.
Kerri, let's talk about social impact investing. And I know that, as we think about the conversations you and I have had around how do we simultaneously act globally, but yet engage locally and really have impact with how we spend, how we save, how we invest, there's a lot of questions that come up around really, truly just even what is ESG and what is social impact investing, what is SRI. Let's start this part of the conversation by just baselining exactly what that means in your world.
Right, that's a great question. And we don't even have a solid definition for every term, but let me tell you the way I use the term. So sustainable investing is sort of an umbrella word that covers all of the SRI, the ESG, and the impact. And SRI used to mean socially responsible investing, which meant screening out the undesirables, which used to be alcohol, tobacco, adult entertainment, weapons, defense, all those good things. And now it's expanded. We're adding this ESG sort of set of factors and filters where the E is environment, right? Clean energy, reducing our negative impact on the living environment. The S is the sustainable. The S is the social, and that refers to everything from labor practices to benefits that you apply to your that you offer to your employees. And the G is governance. And governance is a vast category that includes things like putting women on your board and having corporate transparency about corporate practices. Impact is another word that you hear a lot, and that's providing a positive impact without necessarily having a financial return.
Kerri, I think it's interesting because, we see so much activity in this space now, whereas in the past, it used to be reserved for, like you said, like alcohol, tobacco, drugs, firearms. And now it's about so much more. But I'm wondering, is there more demand for it now? Are financial advisors becoming better at educating their clients, or are clients demanding it from their financial advisors? And is that distinction important in understanding the growth of that space?
Mm-hmm. I think a lot of clients are demanding it, and not all advisors are yet literate on all of the terms and the ways of offering it. And my advice to people out there who have those advisors, keep asking, because there are so many ways to engage with this type of investing. And I love the idea of a future where you can open your statement every month or check on your app, your holdings, and feel good about every company that you own.
Kerri, do you feel like the whole explosion of how we think about fintech has also led to there being more consumer demand, whereas in the past it was something that had to be taught to one or administered by a much larger something, right? But now there's so much information that's just available at our fingertips. And do you feel like fintech's been a part of the explosion of that because of that?
It has, absolutely. I love that fintech is offering so many more access points to investors, not just women, but across the board. You can open a Robinhood account and be buying stock in minutes. You can go to Ellevest and choose that there are preset portfolios that are sustainable, and you can get started right away.
What do you see are some of the major hesitations in the sense of, people who may not even be aware, for example, if their 401ks are invested in the way in which they would ultimately desire, as it aligns with their values and their ethics and their own mindsets. But are there other hesitations because there may be a philosophy that you have to be all in? And let's talk about kind of the stepping the toe in the water approach of what that looks like.
Yeah, I love that you said that. There's been sort of a purity test around this, and wanting to, we want to do it well, just like we do everything else in our lives. But it is very challenging to do, to screen for every environmental factor and every governance factor in every company, and to understand exactly how deep you're getting in every company. Sometimes you just want to buy an ESG screened index fund and put it in your portfolio and feel good about it. So I think rather than seek perfection right away, we want to do the best we can and then know that we're going to get better and we're going to get more educated over time.
Kerri, here's a complicated question for you. And it blends really nicely with what you just said around, not being a perfectionist around it. So I know that, there are various data sets by which financial advisors, make decisions on behalf of their clients. And let's just say, I want to invest, and I may not know a lot about this space, but I want to make sure that my investment monies aren't used to support companies that either create, manufacture, distribute, or sell firearms, for example. Now, depending upon which data set one uses to include and exclude companies from your portfolio, people may be surprised to understand, for example, that a company like Walmart isn't always excluded because Walmart sells firearms, but yet is usually listed as a retailer and not a firearms manufacturer distributor. Mm-hmm. How do you suss out at that level of granular detail to ensure for your clients that if one of your clients says to you, I really don't want to invest in firearms, or I don't want to invest in tobacco, or whatever their passion topic is, or set of passion topics, that in fact at the end of the day you're really looking at the data that you should be looking at.
Mm-hmm. I mean, you hit on one of the toughest issues, right? Companies that have one small part of their business model is objectionable to the investor, but the other, 95% is doing really well. And we have to make some judgment calls. Unfortunately, if you went and tried to build a portfolio of just the companies that are 100% doing everything right, you're not going to have a well-rounded, diversified investment portfolio. I think that's just one of the hard facts. So Walmart is in a lot of these funds. Amazon, you might be surprised, they are in a lot of these ESG screened funds. Now, does Amazon have great labor practices? It's debatable, but they're seen as doing enough good in the world that they're going to make it through the screens.
It's just kind of like a net, right? Does the good outweigh the evil? I want to flip this part of the conversation to talk also about your profession. And I have a bit of experience in social impact investing myself. And that's how you and I reconnected after being apart for a few years at a ESG conference. But, it's interesting because I think that traditionally there's kind of as in many industries, in many professions, there's kind of either you're in it all the way or you're not in it, right? And I really think, and saw this firsthand, that, back in the day in the 60s and 70s and maybe even the 80s, where social impact investing was thought of as something very unique and very specialized, and you had to be all in it as a financial advisor, for example, to really understand that space well enough to advocate on your client's behalf. And then the kind of the big guys, the big gorillas in the room, like the Goldman Sachses and, the JP Morgans, and et cetera, didn't deserve to have a spot at that table because they weren't doing enough good to justify that spot at the table. But now they're in that space. Let's talk a bit about that kind of that natural conflict between the new guard and the old guard. And is there a space for everyone at that table? And should there be, honestly?
Mm-hmm. Yeah, I think that the principle we have to look at here is that those big gorillas have the power and the money, and that power structure is not going to change. If enough of their clients are demanding ESG screen portfolios, they're going to come up with them, and they're going to make the acquisitions, make the changes that they need to make to provide what people are demanding. And if the rest of us, if the purists and the people who've been doing this for decades phenomenally well, but if they don't open the gates and embrace them at the table, they're going to get excluded. So I just think it's an unfortunate fact, but this is the way forward. I think is that everyone gets a seat at the table, and we all together can create pressure on corporations to clean up their business practices and to accomplish the goals that we're after.
Kerri, it's a really, really interesting point. And do you think that that's actually happening? Are you starting to see kind of the blending and the collaboration and the synergistic appeals happening across those two seemingly, once upon a time, very disparate mindsets?
I mean, with just this last week, Morgan Stanley bought Eaton Vance, which a year or two ago bought Calvert Funds. I don't know if you saw that. I mean, that kind of blew my mind. But that's the way this is going. So there's these big gorillas are seeing value in these companies that have been doing great work and have strong teams that are engaging with companies to improve their business practices, and they're buying them. And then they'll be able to distribute their products to everyone. Mm-hmm. So I think net, it's a good thing.
I also, Kerri, really like what you said around, the sheer fact that this is happening also lends more bench strength to the pressure that is applied to companies to actually do better, which I think is really interesting. And I think that's something that, as we critique, the large gorillas in the same way that we often create the in the same way that we critique the Amazons and the Walmarts of the world, but there is a flip side to the conversation in the sense of the value that does come from that. In the same way that, for many people that critique Amazon as being now the big gorilla in the room, particularly during COVID, we hear all the time from female entrepreneurs who really have Amazon to thank for, providing them with a platform to actually help them get exposure to new audiences, right? So there's always another side of the story, I guess is what I'm saying.
Mm-hmm. Mm-hmm. And I think as consumers, we do well by educating ourselves. And I think these companies still need pressure. Chase, they do a lot of lending to oil companies. And I think that they're going to have to take a really hard look at that, about which companies they're going to lend to, what their criteria will be. Are they going to demand more alternative energy on the books of these companies before they continue lending to them? I think if they're going to have any credibility, they're going to have to look at their entire business.
Kerri, here's a question for you. So for those of us who are passionate about so many different social justice and environmental and social issues in the world, information like that may not be easily accessible at our fingertips, but is really important to know. Are there good sources and resources for everyday people who aren't necessarily in your space to find out more information around what companies are really doing good, what companies we may be shocked to learn are doing something that is in opposition to what we believe, knowing that, and again, there's so many different types of issues to be concerned about right now.
Mm. There are a number of good sources. I would love for someone to start a business of putting that together and like a Twitter channel that I follow, because it's different. PACS will. Great investment advisor will put out a paper, and Parnassus, they put out a paper on, they were critical of PG&E before it started the fires in California a couple years ago. There are pieces all over the place. There are organizations, the United Nations is also doing a lot of great work on the sustainable goals, the 17 sustainable goals for 2030. So there are a lot of different places. I find Twitter is a great place. I can follow a lot of these different sources and keep new information on a constant feed.
Mm-hmm, mm-hmm. Ooh, Kerri, I like that business idea.
Please.
You and I have talked about the unique intersectionality of the government and financial institutions and professionals like you that are heavily involved and passionate about all things related to social impact investing and SRI. And it may be surprising for many folks to know that the government actually makes it challenging for ESG funds to be put into 401ks. Let's talk about exactly why you think that is, and are there alternatives to that issue?
Mm-hmm. The New York Times published the statistic that only 2.9% of 401k plans have any option that's an ESG or sustainable investing option, and which is kind of shocking. But I think part of the reason is the Department of Labor is pressuring the fiduciaries that choose the funds for these plans to first look at financial factors like risk and return. Mm-hmm. And unfortunately, a lot of sustainable investing has been seen as underperforming its peers. And that's not necessarily true anymore, but there's been this perception over the years that's been built up. So we need to continue to pressure these 401k plan fiduciaries to add fund options, the fund options that we want.
And that's true, even though there are many, many, many ESG mutual funds, for example, that have outperformed the S&P 500 for quite a while now. So is it that they're looking at maybe like X number of years historic rolling data to be able to make those judgments and assessments, or do you feel like maybe there's a higher degree of compliance or regulatory pressure that's placed upon ESG funds as related to the totality of everything else that that receives more of kind of a blanket approval sign off?
I think that the big 401k providers like Fidelity, Vanguard, they're not getting the pressure yet. I don't think they're realizing how important this is to people. And I think that there's just sort of a lack of a willingness to take the initiative. Because if you look at the last 5 years or 3 years, there are enough fun, they're just excellent performers and are well positioned for what's coming next in the future economy.
Kerri, let's talk a bit about, it's what you're talking about now also reminds me of the fact that we hear so much about how millennials, and especially millennials and women to a certain extent, are really driving the demand for thinking through investing differently. But yet in one of our conversations we had recently, you'd mentioned how none of your clients are millennials. So do millennials get the credit for everything, no matter what the industry? Or is there a disconnect there? Let's talk about that.
That's funny. I mean, most of my clients are Gen Xers like us, or they're baby movers, and they have the money, they have the resources to put toward this problem. Uh, they want to invest that way, and they've got the money to do it. So they need guidance and education and I think that's where we're going to see a lot of push. It's not just millennials anymore.
Yeah.
And these are people who were at Woodstock, the original social responsibility.
There's a reason why tree huggers why the phrase tree hugger came into existence.
Right. I love it.
It's so funny. Let's talk a bit about how COVID has really shaped how we're thinking about saving and investing. We've talked a bit about this earlier, but I want to dive a little bit deeper in the sense of, from the work that you do daily with clients, are there different ways that we should be thinking about during this time, investing through that ESG lens, but also paying attention to what's happening in the international markets versus the domestic markets, or large cap versus medium to small cap? How do we really think about that, and how do we become better informed so that we know, when is the right time to have conversations with our financial advisors, or is this also a good time as we're assessing everything else that's happening in our lives to assess our relationship with our financial advisor if we feel like there are disconnects there as well?
Mm-hmm. Yeah, there's a lot in there.
There is.
Start with, how do we invest right now? The stock market seems really overheated. Tech it's been a phenomenal success story. Almost all technology companies are doing well. And I think that will continue coming out of this. And I think sometimes it's hard to rationalize getting into and getting started investing when the market's so heated up. But once we get a vaccine, I think it's going to be, and all of the sectors of the economy can start moving again on all cylinders, we're going to see the stock market shoot up again. So it's not a time to hold back. But to your point, it's a great time to educate yourself, to learn through this crisis, and to make some good choices in your portfolio.
Mm-hmm, mm-hmm. So in many conversations we have, we know that the market hit a new, in the most recent future, a record low, right? But then it rebounded very quickly as well. And I think for many people, there's a bit of a confusion that exists around why the market rebounded so quickly when we're still very much deep in the heart of the pandemic itself. And the ways in which the market doesn't necessarily reflect reality. How should we think about that? Like, what do you think is happening in that sense? Is it truly just a prediction of what the market expects to happen in 12 to 18 months, or is there more that's really causing that extreme volatility? Particularly also when the NASDAQ reached an all-time record high, which is largely about technology, but there's got to be something else going on there too.
Mm-hmm. I think with the stock market is valued based on future earnings expectations. And there have been winners and losers. And tech companies, the future earnings expectations for them are off the charts. And we know that a lot of us have adapted technology faster than ever. I mean, look at us, we're talking on Zoom with our ring lights and we've got all the technology that maybe we wouldn't have moved into so fast before. So now oil and financials are sectors that haven't done well. And also, of course, entertainment, cruise lines, travel. So there are some sectors of the economy that did not bounce back, and their share prices have not. So it's not across the board. And although you still want to have a diversified portfolio, be aware that those sectors are not doing as well, and you wouldn't want to focus as much there. I also wouldn't focus as much on international investing at this time where we've had a strong US dollar for a decade. And there was a little weakness recently, but it hasn't changed much. So international, although some areas of the world have had better experiences with COVID than we have here in the US, it's not necessarily a place where you're going to get better returns than you do in the US.
That's really interesting, Kerri. Thank you. Question for you around kind of the mix between how you think about a diversified portfolio. And when we think about assets, traditionally we think about money, right? We think about, kind of the tangible things also that we may own, although sometimes those depreciate very quickly or appreciate very quickly as well. How do you talk to your clients about really truly what does a diversified portfolio look like? And I'm asking that question particularly as we think about like how can women support other women that may own their own businesses, for example. So, for example, how do we get more women interested in angel investing? How do we get more female VCs when we know that only, but less than 4% of women across the country are actually VCs? Like, how do you think about that for yourself as a woman, as I know who's very passionate about gender equality and equity? But then as your role as a financial advisor, how do you ensure that you're also advising clients that really take kind of that full scope look at their own portfolios?
I think angel investing and venture capital investing are such an important way to support women. Yet it's who you know. It's about who you know, and there are barriers to entry. In many cases, or you have to have a certain amount of money to begin. And I think that's an area I would love to learn more about. Because it's still a little bit separate from your traditional financial guidance, right? The financial markets. On the other side, what we can do in the financial markets is we can encourage companies to put women on boards. And we can also encourage companies to look at mergers and acquisitions with more women-owned businesses. So I think it's a combination of all of the above that we want to do to push our cause forward.
Kerri, I think it's really interesting, particularly around what you said around the mergers and acquisitions, because traditionally I've thought about, governance from the perspective of number of women on boards, number of women in C-suite roles, fairness in labor practices, and, kind of those very tangible things that you can either say yes or no to, right? But what we're talking about is so much more complex, particularly because, there are many women who launch businesses not for the ultimate goal of exiting, right? But when you look at kind of that more traditional masculine mindset around, the reasons why men often start businesses, and yes, there are outliers everywhere, but it's often around growth and scale with the ultimate goal of exiting or an IPO, with some sort of significant cash reward at the end of it. So for women who are really passionate about, number one, supporting each other, very passionate about gender equity and equality, like let's have that conversation in the sense of what do you think of when I say all of this, particularly because at the beginning of our conversation we were talking about the importance of getting more capital into the hands of women.
Precisely, right. And I think that comes through our networks as well. Mergers and acquisitions, a very busy area of the economy right now. Like companies are looking to snap up anything that's sort of in the themes of artificial intelligence, any electric vehicle, anything that women are interested in, like ESG investing. There's so many companies who are so busy looking for acquisition targets. And we need to be more in that mindset and foster our networks so that when we're ready, and we need to know when we're ready, like we can step away from it. I think we often get that founders sort of connection to the company, like it's our baby and it's so hard to let it go. But this is a very valid way to engage and cash out at the end.
So Kerri, do you think it's also about when we launch businesses, thinking through the business strategy of it a bit differently? And so that from day one, and knowing that it's about the journey and it's not maybe about the end, the end cash out, the end payout. But if we're enjoying and feeling fulfilled and making revenue along the journey, but from day one, often business plans happen very organically, right? And so is there more, I guess my question is there more of a money mindset that we should be putting around even the early stages of how we think about launching and growing a company?
Mm-hmm. I mean, it should be in the business plan from the start. And another thing you want to be really cautious about is make sure you're hiring people so that you're handing off tasks, right? Teach them how to do it the way you would do it and then hand it off. and build. And that's how we build companies that we can eventually let go and let them be self-supporting.
Kerri, here's a COVID question for you. What have you been thinking about, and what kind of reflections have you made for yourself, both professionally and or personally, during the last 7 months? And I can't believe it's been 7 months. I keep saying 5 or 6 months, but the months keep ticking up and up. What have you learned over the last 7 months?
I mean, I could fill a book with it. It's just been, one of the things that I've started doing over the last year or two is I wasn't satisfied with the ESG, sustainable investing portfolio options out there. And so I started building them myself and educating myself and started doing trading at home, because everything's more slowed down, right? And I'm in a home office. I've had time to educate myself and move into something I was really interested in. And that's been really satisfying. And Ben, I started this talking about values, and that's a way that I've been able to exercise my values. But there's so many areas that I could go on all day.
That's a whole nother episode.
Right. On a personal note, I've started cooking dinner for my family every day. And I didn't do that before. And that's been really rewarding.
It is. I think it's interesting, when we think about, tying this back to money, to think about, the various shifts that we've made, either consciously or subconsciously, and just how we consume too, right? And I think that we're all finding that we can live a lot differently with a lot less and still be okay and feel a lot of gratitude and thankfulness. And I wonder, then what does that mean for how companies decide to continue to create value, and if that value will be tied more to values, right? As companies really strive to stay competitive in the marketplace, no matter what size, public or private.
Yeah, I think we're all looking in our closets at the clothes and shoes and handbags that we're not wearing, and thinking about that, right? And where do we want to spend our money? I think when we get out of this, and we're back to our regular lives, experiences will be more important than ever. And we're going to be looking for our luxury retailers and travel companies to provide those experiences for us. But also tying it back into how do we give back while we're having those experiences. So it's a big ask. But I think it's going to be pretty inspiring to see what comes next.
Kerri, it is time for the lightning round.
Okay.
You're part of the show. All right. In 3 words or less, let's just say 5 words or less, because everyone always goes over 3 words. In 5 words or less, how would you describe 2020 in a nutshell?
Oh my gosh, slow down and distance.
What are you binge watching right now that you love?
Oh, Tehran. Have you seen Tehran?
No, I don't know this TV. One.
Oh, it's so good. Yeah.
What network or what platform is it on?
I think it's an Apple TV.
Okay.
Show. Yeah.
Okay. And then, my last question, what advice would you give today to your 85-year-old self?
Oh, gosh. Travel more. I think travel more while you're young, and probably don't be so critical of your body type also.
Those are 2 very good ones. Kerri, thank you so much. Oh, how do our viewers stay in touch with you if they want to be in contact to learn more specifically about the work that you do?
Come to our website, apogeewealthadvisors.com, or you can find me on Twitter. It's just my name, @Kerri Kimball. And please do reach out. I'd love to be in touch.
Thank you, Kerri. This has been an absolute pleasure and delight. And we have so much more to talk about. Would love to invite you on for a future episode.
I would love that. Thanks so much for having me today.
You're welcome. Thanks, everyone. Again, Jan Mercer-Dahms, the Vice President of U.S. Development with Join Mayshad. Please subscribe to our YouTube channel and check us out at joinmayshad.com. Thanks, everyone. Hello. Please make sure to subscribe to our YouTube channel and don't forget to hit the bell to receive notifications of all of our content.